What's going on, money lovers? Enphase Energy jumps in the aftermarket after they had a great quarter. We're going to take a look at their earnings in a second. The stock is currently up a little over 16%, as you can see in the chart here after hours. But before we get to that, some breaking news coming in. Gotta get it to you guys. Hallelujah. President Biden finally acknowledges Tesla's EV leadership after a year of silence. Do you believe in miracles? Thank you, sir, Mr. President. This is all that we've wanted all this time, is just for you to simply tell the American people the truth. Thank you. Alrighty, so let's get on to the Enphase earnings report here. So they reported quarterly revenue of $412 million for Q4 2021. Their cash flows from operations, $97 million. And their ending cash equivalents, and marketable securities balance was $1 billion. This is after they completed $300 million of common stock repurchases in December 2021. Take a look at some of the numbers here. Their revenue growth has been nothing short of tremendous. I mean, as you can see here, Q4, $412 million of revenue, up from $350 in Q3 and $264 million in Q4 of last year. So some tremendous growth there, and pretty impressive profit margins as well. Their gross margin and pretty impressive gross margin rate as well, coming in at 39.6%. And for the year, 40.2% gross margins. Their revenue for the year, almost 1.4 million, nearly 100% growth year over year of 774 million back in 2020. Now the gross margins have declined a little bit, nothing too crazy, down from 44% to 40%. And their operating expenses have increased a lot, but this is to be expected. With a huge growth company like this, operating expenses for 2021 were up to $338 million from $159 million of last year, so more than doubling. So a lot of the increases to their operating expenses had to do with new product launches, research and development, and IT, as well as we'll get to in a minute, they gave out a ton of stock-based compensation. And they generated $352 million in cash flow from operations in 2021, up from $216 million in 2020. So it's a really good growth story here. And then their forecast for 2022, they're forecasting revenue in the range of $420 to $440 million for the Q1 of 2022. And if we just look back to Q1 of 2021, they brought in $300 million revenue. So to go from $300 million to $420 million, we're talking, 40% growth here at the low end. They're also forecasting their gross margin to be in a range of 37 to 40%. So a great profit margin if they can keep this up. Net revenue, we went over. While their net revenue doubled, so did their cost of revenue, pretty much doubled. But their gross profit was still up pretty significantly year over year. 2020, it was $345 million. 2021, $554 million. Now, a lot of that has to do with they doubled their R&D expenses here from $55 million to $105 million. They more than doubled their sales and marketing expenses here. And they also doubled their general and administrative expenses. So net income ended up being $145 million, up from $133 million last year. So they actually ended 2021 with less cash. They had $119 million in cash versus in 2020, they ended with $679 million. And a lot of this could be to do with, they made a few strategic acquisitions this quarter. So total assets almost doubled up to $2 billion from $1.2 billion in 2020. They did pay down a lot of their current debt, which is great to see, from $325 million in 2020 to only $86 billion in 2021. However, they did substantially increase their long-term liabilities. Long-term debt here went from only $5 million to $950 million. So that's a huge increase. Definitely something to keep an eye on. And we take a look at their cash flows here. Net cash from operating activities up from $216 million to $350 million for 2021. Now, they also repurchased a ton of common stock this year. 500 million shares they've repurchased as of the end of 2021. So all in all, this company is looking very good. I've had it on my watch list for a long time. Let us know in the comments below if you're an owner of Enphase shares, why or why not, and what you think about the company. But yeah, they had a great earnings beat. Just to summarize, 73 cents per share versus 58 cents expected. Revenue of $412 million versus $397 million expected. So a good beat all around. So a great quarter for the stock, and it's had a pretty good 5 years here. If you bought in 5 years ago, you'd be up over 9,000%. That is pretty nuts. Yeah, I mean, the stock is actually down quite significantly from its highs. It's down 50% from the highs. So if you like the story here, if you like the long, we invest for the long term, and if you like this company, this could definitely be a good buy-in point here, as it is down pretty significantly from that high. It does have a PE ratio of around 86 right now, which is high, but you're going to pay a high PE ratio for a company experiencing such tremendous growth. I mean, the company grew their revenues 100% year over year. If you enjoyed the video, please don't forget to like, subscribe, drop me a comment below. Let me know what you think of the company. This is Vinny from the Investment Club, and I'll see you next time.